And thank you very much for those comments, which I think give us a fantastic starting point. We now move to our first panel session of today, which builds on many of the themes that Anne has talked about. As No Time to Lose, our report with PwC showed, there are few areas more important for the UK's long-term success than fintech. And our first panel will be looking at how the UK can continue to lead from the front in financial technology, how technology is redefining the competitive landscape for financial and related professional services, how we can identify best practices and case studies of technology in action, and exploring how the UK can remain at the forefront of this amidst rapidly growing and intensifying competition. We have a terrific panel to look at this, chaired by Suchitra Nair, partner, head of the EMEA Centre for Regulatory Strategy at Deloitte, Valerie Bannert-Thurner, Executive VP, Chief Revenue Officer at the Fintech Division at Nasdaq, Paul Landless, partner at DLA Piper, Trevor Mallinson, Head of Strategic Relations at Bloomberg, and George Marcotte, Senior Managing Director and Chief Strategy Officer, UK and Ireland at Accenture. Can you please welcome them to the stage?
Good morning, everyone. Thank you for joining us in person, and thank you to everyone online for joining us virtually. Today, we'll explore financial technologies and how it's changing firms and markets. Clearly, that's a key driver of growth, and we'll explore that with an expert panel here today. Let me introduce my panel. Valerie Bannert-Thurner, who is an Executive Vice President and Chief Revenue Officer of the Financial Technology Division at Nasdaq. In her role, Valerie leads the global sales and revenue operations teams across the Financial Technology Division, which includes several product portfolios across cap markets technology and reg technology. We also have Paul Landless, who is a partner at DLA Piper, and he focuses on financial markets, and he's got deep experience in structured finance, derivatives, and a wide range of financial markets products. So really looking forward to hearing your views on how digital assets will transform markets. George Marcotte, he leads the Reinvention Studios at Accenture and was until last year the interim CEO at Lloyd's. He works at board level on where AI genuinely changes the economics of a financial institution. So really looking forward to hearing your views on that too. And Trevor, who leads Bloomberg's strategic engagement across institutional and regulatory stakeholders, aligning policy dynamics with commercial priorities. And prior to this, he was global head of the electronic rates trading and the CEO of Bloomberg European Trade Book. So again, lots of interesting market experience as well as technology experience. Lastly, I'll just introduce myself. I'm a financial regulation partner. I look at the intersection of regulation and strategy with a particular interest in technological innovation. So that's us. So let's kick off and just explore some of the themes in the No Time to Lose report. So we know that technology is shaping or reshaping market structures and driving competitiveness. In your experience, how are firms innovating using these emerging technologies, but how are they using it as a strategic lever? Valerie, can I come to you first?
Yeah, thank you, Suchitra. Thank you very much. It's a great pleasure being here today. Maybe just a bit of context. One of the benefits I have is because being part of Nasdaq, we really have two perspectives onto this topic. On the one hand, obviously, Nasdaq is driving a lot of change in terms of always-on markets, tokenization. So we're driving the agenda and the policy, especially in the US, but also to some extent globally. And at the same time, we work with over 3,500 customers globally, all financial institutions, and help them innovate, use technology. And so we get an insight into how they compete and what they do to kind of push ahead. I think we've all been in this industry for some time. Technology has always been at the forefront. I think what's different this time is that we have the convergence of three mega trends all coming together and all having a really big impact and an opportunity to truly disrupt, right? So One is obviously always on market, and I know a lot of this is driven initially by retail and now by the US equities markets. But it's definitely a wave that's coming that we see again, and it's going way beyond the crypto space. So we will expect that markets will run 24/7 on the weekends, everywhere, globally, all the time. So that is, the whole world needs to get ready for that. And so we see a big mega trend around that. Obviously, the second one, which we discussed here, is all around tokenization. And that's everything from, kind of moving way beyond the crypto into tokenizing basically every trade and every transaction. So every bit that is represented as money, every fund, but all the while, obviously, we are pushing ahead around the security side. So that is a mega trend. And then thirdly, obviously, AI. So the big challenge we see now is how banks and financial institutions kind of leverage all three and have them come together to really reinvent their operating model. So it's about how they think about tech, how they reimagine their operating model, and ultimately how they think about their ecosystem. So who do they work with? What do they still want to do? What do they partner with? So it's shifting. How do they interact with their customers? And all three is what they need to take into consideration to charge ahead.
That's great. How about you, George? How are you seeing this technologies being used as a strategic lever?
Yeah, it's a good question. I think, I guess first of all, just some credit to the City UK and PwC for pulling together the No Time to Lose report. I think that was a great piece of work done by the team and brought us all together today to talk about, I think, what's really important to the benefits of bringing capital, talent, and regulators together to get the advantage on where it will make a difference, which is getting things to be deployed as opposed to, I think studying and acting on the space. It's really important to start to take some good steps in the right direction around deployment of these things. But specifically, I think there's two thrusts that are happening in the market. One is very straightforward, and I think has been talked about for a long time, what I would call the streamline play, where you're using technology, financial technology, to try to make things more efficient. And I think there's firms that are having reasonable success with that. The bigger opportunity set, though, is actually what I would call the capitalized play. So how are you using AI to make a difference in terms of the key judgments that need to be made by the firm, and being able to make better judgments and scale those judgments through AI, where you can bring together new data sets or new granularity of data to make a different decision. This is the space where you can make a big difference in deploying AI. What that also takes, though, is training of the agents with some of your most knowledgeable people in your firm, because the AI needs to learn what's actually a better decision in different contexts and different situations. So you have two different opportunities to improve your P&L and also make a difference, give variance compression in how you are making judgments. And that's really where I think the big discussion will be over the next 12 to 18 months.
It's really interesting. And Trevor, coming to you, because you've always been in the kind of market space. Where do you see the emerging technologies really making an impact?
Yeah, so I think a lot of people are using AI in their everyday workflows, right? So a lot of people will be using Claude and other AI tools to write PDFs faster, to perform analysis faster. And talking of the No Time to Lose report, which is excellent, as was just mentioned, I read it a couple of times. I'm a fanboy. I needed a lie down after the first time I read it. I was quite panicked. But in terms of customer value creation, I think is a concept that's brought up in that. How are people using AI to bring value to the top line? We've just developed a tool at Bloomberg called Ask B, which is Ask Bloomberg. It's a generative AI tool, and what that effectively does is it operates like an analyst might operate. So you can ask this tool conversationally, tell me about the Netflix earning call and how does that impact to my portfolio? What's the impact on my portfolio? Or any number of different things that an analyst might perform for you. You can look at the data that comes back. You can interrogate it. You can reach out to that analyst if you want to, and then have a conversation with that analyst. So that sounds like a plug. It's not intended to be a plug, but that's kind of one of the areas in which we are integrating real generative AI into our workflow.
Brilliant. I want to explore AI a bit more. But Paul, do you have any kind of overarching thoughts on emerging technologies and how it's affecting strategies, but it could be even within the context of professional services.
I mean, I think all businesses, when you're looking at an AI program, you're looking at integrating DLT or digital asset methods, you're thinking longer term around quantum, you're thinking, you know, a lot of these conversations ultimately come back to your legacy infrastructure, your legacy models, your legacy systems, and above all, your legacy data and your data governance and access to data and your data lakes and data lineage. And looking at how you're accessing that data, assessing it, looking at quality around it, managing regulatory and legal and litigation issues, particularly from a consumer perspective, as well as wider stakeholder and sort of public observation of your behavior and usage. A lot of it comes back to your existing program management and change management as to looking at the talent, looking at your systems, and having a process and a wider culture that's looking at your data, looking at your processes and moving forward. And certainly as a law firm in professional services, when we're looking at this, ultimately we're selling our knowledge, we're selling our experience, and we're selling our guidance to provide forward-looking market intelligence and future-proofing clients' businesses and giving people strategic direction, strategic decisions. But it comes back to how are we harnessing our past knowledge, our past analysis, our past experience, and our past advice, but also our past deals and looking at themes within the deals, within the documents, within the contracts. So for a law firm, certainly it's, you know, which law firm, as it integrates its AI program, which one's equally harnessing its existing know-how and being able to maximize forward-looking insights for clients.
That's brilliant. So lots of use cases in terms of how AI is going to change processes, operations, or even thinking. I just want to spend a moment to explore what are the risks of AI. I mean, because every time we talk about AI, the opportunities are huge, and then there's a subtext of, you touched on litigation a little bit, but what are the risks beyond cyber? I mean, that's well-trailed and, you know, well written about. Any thoughts on what are the risks and how could you potentially mitigate them?
I think you need good data. So you need good underlying data for the AI to interrogate. And you know, everybody in this room will have had you know, episodes with your whichever AI provider you use where you say who's playing football tonight, and it will tell you that somebody else is playing football, and you say no, that's wrong, and it will say, oh, of course you're right. How clever you are! It's somebody else playing football. And you know, in financial markets, you can't get that wrong. You know, if people are making trading decisions, if they're making investment decisions based on poor underlying data with, you know, a loose interrogation, you're going to have a problem. So I do think the quality of the underlying data is super important, and therein lies a risk.
It's a really good point. Did you
I
want
actually think it's increasingly it's also the people.
Yeah.
And I certainly as a law firm, you know, knowing how to manage forward generations and forward skill sets, looking at AI outputs and AI assessments based upon that data work that Trevor's touched on, but how that's being merged and fused with past generational experience and past generational insights and practice and training, I think it's the issue. And just the other day, I was looking at a scenario where a young lawyer was looking at the AI analysis of various provisions, and what was described by the tool as a regulatory change or an illegality default within some provisions seemed pretty compelling. You sort of looked at it and thought, okay, it's definitely a regulatory change event of default. But actually, if you look closely, you can see that the words event of act of state plus prevention plus payment didn't necessarily mean it was against the law or against any regulation. It might just mean something else.
Yeah.
Some government was taking some action to interfere with the payment. So you know, managing differing human insights and human experience and how you're developing your people in your business going forward to not only be AI literate, but data literate with the data governance, but equally capturing past experience and past processes, I think is very, very important. So I do see a people risk as to how each organization develops its talent pool for managing AI integrated operating models.
Yeah, the human in the loop is so key in all of this and how they operate, isn't it? And George, any final thoughts?
I think there's just one more I might add, which is the potential unintended consequence of what many firms are trying to decide, whether they sort of build their internal, intelligence around their data set and their judgments, or whether they rent that from a frontier model or other places you can go to get that kind of input. And I think what happens is there might be an unintended consequence of some of the labor taxation and the NIC raise, because a lot of firms think that by not having people on the firm, they're making a better tax decision than having somebody on the books to kind of build that out. And I think what that might lead to is either some sort of herding or correlation where people where the system is sort of processing ever-increasing sort of commonality around model outputs that may unintentionally create systemic risk, because just the way that the flow of the data and the judgments are coming together, almost like what happened in 2008. So I think that's something to be thinking about. How do we kind of think about, as the world moves to AI judgments, how do we kind of manage that whole situation?
Brilliant. Right, I'm going to move us on to digital assets and wholesale markets. Valerie, I know you're thinking about this quite a bit in your kind of day job, having really good conversations. How do you see the broader wholesale market ecosystem changing in the, let's call it the midterm? Because I mean, things are happening quite quickly, but it's not going to happen in the next 6 months. But there's clearly a midterm story here, isn't it? Where do you see the markets going?
Sure, and the perspective I can share, and obviously that we are heavily involved in, is really around kind of, there's obviously kind of the whole move around digital money, and I think there's a lot of experts here. Maybe I'll talk a little bit about digital, like tokenized securities, because that's kind of the next wave, and I think we're a little bit, it's, kind of just evolving. It's really interesting. I think, obviously, a lot of push comes from the US at the moment, because also of deregulation. There's the kind of the innovation exemption basically rule that's coming in. Nasdaq's been working very closely with the DTCC in terms of really saying, okay, and it was approved by the SEC around, okay, we want to truly tokenize securities and do this in a safe, scalable way, but also in a way that protects the interests of the actual issuer. Because I think a lot of the discussions that we have around tokenized securities is around, there's lots of lookalikes. You can basically, basically at the moment you create these two worlds, right? There's kind of the unregulated and regulated world, and it's quite bifurcated, right? And a lookalike products, but when basically things go wrong, like you don't have a lot of protection. So the things that we are trying to do is really have these ecosystems converge. We think there's benefit from actually bringing basically traditional ecosystem capital markets and kind of the blockchain-based digital world truly together and have the benefits across both, but also really making sure that the issuers' interests are well protected. So the things that we are doing and pushing, and I think just over the last 2-3 days, you've seen a lot of announcement in terms of Coinbase, Binance, and kind of how they're going to go about it. So I don't think there's a clear, like, this is how it's going to play out yet. There's a lot of discussions. That basically the areas we are pushing is making sure that the issuers have oversight and control in terms of their shares, in terms of and how it's basically going to be used, and kind of how the benefits of it are basically flowing through the different investors and in what ecosystem. So can you control that and keep it in a regulated ecosystem? Do you as an issuer have a right to say whether it's going to be tokenized or not, in what way? Protecting the investors and really making sure if you actually get a tokenized securities, you actually get the thing. It's not a lookalike, it's not an emulation, it's the actual full ownership. And then basically back to the convergence, one of the things we're doing is, for example, we partner with Kraken, where we kind of use the stocks mechanism to really basically make sure, even like in unregulated markets, you have exposure to the real underlying securities, but maybe you don't get paid dividends and things like that, because that's kind of part of the regulated ecosystem. So we think that's kind of the direction of travel. You've got to bring it together and bring the whole benefits along for it to truly flourish. And that's what we're pushing. We see a lot of different, and I think we have some experts here in terms of different perspectives from different regulators globally in terms of what approach is being adopted. I think what's good is to actually deregulate and let innovation thrive, so we can actually get to convergence faster.
Brilliant. So Trevor, which commercial use case are you most excited about?
Oh, most excited about? Well, a lot of, so we sit in a kind of privileged position where we are. We get to see both sides of the market. So I used to work on the sell side and I had some interaction with the buy side, but not so much. Now I get to see both sides of the equation, so we get to have conversations with everybody. I think the piece that people are most excited about is the piece that mechanically fits best into the infrastructure that's there right now, and that's around the movement of collateral. If I was to pick a particular use case, I think the one that looks really interesting to me is repo, repurchase agreements, the ability to move cash intraday. So you can now do a 30-minute repo if you want to do a 30-minute repo, and if you have capital sitting around, you can actually put that to work during the trading day. And certainly I've had hedge funds, real money clients very excited about that particular use case. And it's the speed that this works at that is the really exciting thing for them. You don't have to wait to the end of day. It's no longer an overnight repo. You can do that in 30 minutes. You can technically do it in 2 minutes if you're brave enough. I mean, not a lot of people are, but the ability to actually use their capital intraday, I think that's the most exciting use case right now.
That's brilliant. Paul, I know that the law firms have been piloting a number of use cases. I mean, but also you've got a kind of global perspective on this. Can we explore, what other commercial use cases you think will gain traction globally?
Like Trevor, I think as a law firm, you're sort of in a front row seat. I always say it's like sitting in the front row of a boxing match. But it's certainly at DLA Piper, we're lucky because we've got lots of jurisdictional touch points, but it's great acting for a whole range of participants. And I just wanted to emphasize the point around convergence that Valerie touched on. When I look back at fintech conversations and digital asset and crypto conversation, there's always this euphoria around disruption, around DeFi versus TradFi, around differing operating models, differing processes, differing talent, differing decision-making styles. But I think as we're moving from proof of concepts and pilots and ideas, and you're seeing the TradFi universe and traditional finance really take on DeFi experience and technology and methods, we're into this convergence. And that convergence question is no longer about converged compliance processes, converged skill sets and methods and governance attitudes, but also now convergence around the infrastructure. And that is really interesting because as a lawyer, we've been asking ourselves, what is it and where is it? Is it property? Is it security? But very much to Trevor's point, as we're moving forward, people are asking, where does it fit within the existing infrastructure? And how does this actually operate? And one of the big things that I'm noticing, particularly in this kind of operational resiliency age, where we're getting very concerned around the line between what is regulated and what is unregulated. I call it shadow infrastructure, that we've moved from shadow banking to shadow infrastructure, that the Lehman-related words around too big to fail, too connected to fail, too systemic, there was an integration and a sort of convergence question. We were worried about cloud providers, we were worried about AI, but we're increasingly worried about unregulated corporates and unregulated infrastructure, unregulated vendors, unregulated areas of technology. And there'll be unregulated, informal, quasi-market infrastructure. And I think as we go into this converged age, we're going to see a very interconnected world where the line between a clearinghouse or a depository or a payment system will be blurred with the other platform or the other use case or the other technology. And I think there's now a race to come under the umbrella of what is settlement finality. Where are there known areas of regulatory supervision, but above all regulatory certainty and legal certainty? And there's various important resultant issues there around your regulatory capital cost and those live exposures and the regulatory capital elements around that need to ultimately be determined around the treatment from a capital perspective. And I think, to Trevor, I certainly agree that collateral and repo, where I'm sitting, is key. There's been a lot of focus on the primary markets, around digital bonds, digital securities, a lot of focus around the architecture and the infrastructure for those digital bonds, particularly the digit and other areas. But the real question is the collateral. What's the onward secondary use case by the buy side and others to repo it, to use it, to pledge its collateral Where does it play out within wider sterling operations? And what's the usage for an asset manager or the buy side for those gilt holdings? And will it still be treated within the same way? I think one of the, the key questions will be, that sort of integration. I would also say on 24/7, I think there'll be 24/7 pricing, 24/7 data, 24/7 execution, and 24/7 trading. But there will not be 24/7 collateral management.
Yeah.
And I think on repo, already now, on intraday repo, people already say, actually on intraday, we're probably living a 5-day, a 10-day, a 10-hour day.
Yeah.
So I would say the 24/7 opportunity might be held back by collateral moving behind it and margin activity not being so 24/7 because it's held to that existing infrastructure and the importance of collateral management processes within that existing architecture as well.
Yeah, if somebody cracks tokenization of collateral, we might move this along quite quickly, isn't it? Just to let you know, I'm going to come around for questions in a minute, and those virtually, please do submit your live questions. I'm going to allow for some time for that, so feel free to send those through virtually, but in a minute I'll come around to you as well. Really good points around interoperability, protocols, and the market moving. What needs to happen from an ecosystem perspective to move this along? We've had great pilots. We've had sandboxes. We've had some jurisdictions experimenting with issuances. Valerie, just coming to you, what does the ecosystem need to now do to accelerate this in the spirit of no time to lose?
Yeah, it's timely because we're just basically at the tail end of actually doing collateral management in a tokenized way and moving it around. Like, we have the benefit of running the Calypso platform, which is basically the last mile. We have hundreds of customers using our collateral system globally, including CSDs, et cetera, and CCP. So we have kind of the endpoints, which is great. And we've been working with some of the largest asset managers globally. We've basically issued the actual assets. We've moved the collateral. But to your point, what is hindering us from actually scaling it out at large? And I think for us, it's really two things. The technology works. It works. It's proven. It's there. It's actually great. I think the one part is there's still a little bit of mushrooming of too many vertical initiatives. Like, there's a lot of different initiatives, not all on the same underlying infrastructure. Interoperability in the kind of the blockchain world is still not solved fully. That's a call really for the tech industry, right? Like, we can solve this. It's just we need to get there. So it's around making sure that kind of these POCs are way beyond the POC now. They can actually all go production, but we don't have it connected as a true proper ecosystem. So that's a big hindrance, but I'm very confident we can solve that, and it's already well underway. I think the other one is actually, and we have some lawyers here, it's good, is actually the things we're struggling with is for our customers kind of are hesitant to actually go full scale in production because things like finality definition, what happens in case of an insolvency, like how are things going to play out when things go haywire? Like in Happy Days, everything works beautifully. What happens if things break, and what are the legal ramifications? And I think there are some approaches. There's just not enough use cases and real evidence and proof points for people to be comfortable enough to say, I'm good with this, let's roll, basically. So I think it happens in pockets. It happens in kind of confined ecosystems where you almost like have a trusted circle. But for at scale, we need the ecosystem from a legal regulatory clarification perspective to step up further.
And I'd also say sometimes people talk about needing to change law, change regulation, but sometimes actually the existing law, the existing regulation is sufficient.
Yes.
And really it's getting the clarity in the interpretation and the confidence around your legal attitude. But even on the regulatory side, it's getting clear clarity and direction and engagement around regulatory policy thinking, around how that existing rule set might still be satisfied by a different method or a different operating model. So often what you are seeing is efforts to try and provide that regulatory clarity, not only by looking at regulatory solutions to actually change the rule sets, but also to give a lot more clear guidance and clear direction around that. And I think that provides a lot of market confidence and business decision making and commitments on budgets or resource to actually say, yes, we have a policy certainty that this approach is sufficient.
And that's the overriding theme with these new technologies, isn't it? The existing framework kind of works, and what we need is that translation from an analog world to a more digital, always-on world, if you like. I mean, so they've taken that approach for securities tokenization, but as you say, settlement finality is the kind of big question around that. So some interesting kind of perspectives there. Any final thoughts from you, George, in terms of any additional levers where the ecosystem needs to move?
I mean, I think these points are all excellent. I think the only thing, it's maybe just an adjacent point, really. It's part of, back to your point around awareness, it's having the public understand what they're really investing in or what they're actually using as you move from this sort of more analog to a digital world. I think that's going to be something that's part and parcel of being a competitive society, is having the folks understand really what they're working with.
Brilliant. Any questions from the audience for the panel? Yep, there's one there. Yes, sorry. Could we have the mic? Thank you.
Thank you very much for the presentation. When I listen to you, you are all very positive towards AI. If there was a contrarian person sitting in seat number 5, what would they say? How would they do this differently, if at all?
Contrarian?
I can start. I mean, I think the thing would be, what does this mean for people? So we're talking about the technology side of it, but I think that AI is actually a workforce strategy as much as anything else. And how do you progress people in a world where these tasks are easily, lower level tasks are more easily replicated by a machine? And then how do you kind of give people the opportunity to learn in a learning economy? I mean, I can tell you, at 30 years in Accenture, I was great at being the first draft creator, and now I'm terrible at it. But I am a very good editor. And so while the machine can create a great first draft, I guess, can realize how you add more value, move things along. I think we're trying to figure out, how do you get junior people who are keen to learn, but the model is shifting? And how do you kind of calibrate their ability to do and master skills with what mastering a skill, the definition of mastering skills actually is changing at the same time at a pretty rapid rate. So that, I think, is a fundamental question we've got to get right, because that will mean whether people decide that the UK is a great place to create a family and create a career, or they have to go somewhere else to do that. And I think it's really important to create that opportunity here.
And I know the Financial Services Skills Commission is doing quite a bit around, what does the future of the workforce look like in an AI-driven world? Any additional thoughts? Yeah, Valerie?
I mean, so I have a 17-year-old daughter, and she's truly anti-AI. It's really interesting.
Yeah.
The young generation is super, super critical of what AI is going to do to their future and how they get ready. And I think it's on us to get them ready. And I don't think, personally, in our school system, we're doing a great job at it yet. So I think we have a big task at hand there. And that's going to be the future problem. So it's our call to action, for sure.
Yeah, I mean, I go back to my point about people, and I think Trevor's point on data. I think you have to sort of assume differing AI models and differing AI capabilities to be emerging, affecting different businesses. But ultimately, it comes down to your constancy and around your data governance and your data control, your quality of your data, and how, as an organization, you've got that infrastructure primed, but also your talent strategy and your people development around capturing past experience and past understanding and past methods, but having AI literate and AI ready workforce who can actually adapt to differing AI models and are AI literate to understand the evolving, differing AI software that's arriving. I would also say for the fifth person that they may well say that quantum, it may be something that will have greater business impact than trying to integrate AI, which may come with it a lot more legal or governance or wider policy effort, whilst quantum impacts might have equivalent business results. Yet still that reinforces the need for your data quality and also having a workforce that's AI literate but also quantum ready.
Brilliant. I want to move us along. I've got a virtual question here. Does the UK have the risk appetite to push ahead like the US with digital assets, but why not AI as well? If not, how can we unblock
take that to start with. It was a point I was thinking of whilst we were talking, actually. I think there needs to be a broader boardroom understanding of, if we just dislocate AI and digital assets. If you speak to a lot of boards about digital assets, what's the first thing that springs to their mind? Bitcoin. Crypto. And, the volatility that comes with Bitcoin and crypto, right? And park that there, not interested in digital assets, let's go and look at something else. So I think there needs to be a really good understanding that digital assets, it's part crypto, it's part stablecoin, and there's a huge case for that. But it's also part an infrastructure play around what we were talking about earlier on, and the real efficiencies that come from being able to use these rails that move at the speed that they do with the certainty that they can and will provide. So I think for us to really embrace this and really move forward and take on the appetite that is suggested in that question, there needs to be a really good understanding that it's not just Bitcoin. There is a lot more to this. And that sounds like a really obvious point, but I have very mixed conversations at very senior level a lot of the time.
So this rails point is quite important, isn't it? Because who needs to take the lead on this, Valerie, do you think? We touched on industry, but is it the exchanges? Do we need something like a SWIFT or a payments type solution where industry comes together and creates an organization? What's the solution to moving the dial?
So my personal perspective is very much, if the value is there, the industry will come together to figure this out. And there will be, as always, there will be a couple too many, it will converge. So I think it's just a matter of speed. I'm sure it's going to get there. Yeah. And I think it will be a combination of industry initiative for sure, and a couple of leaders who just charge ahead, and then we need to come back together. But I don't think that's a blocker at all. I think tech will get there. I think the standards will get there. I think the ecosystem will get connected. There's too much opportunity to not plug the gaps. So I think it's more the regulatory framework and the clarity and the guidance that you said to give people comfort. I think that's a bigger blocker.
And I know the DTCC is doing quite a lot with industry participants, isn't it, to try and move this along as well. Great. Any other questions in the room? If not, I'll take another one from online. The conversation has been very Western world-centric. In a world of increasing geopolitical polarity, what are the threats and opportunities with AI?
Wow.
I could start.
Yeah, go for it.
Yeah, we have a very global business. I think, and I have to say, and we talked about this in the prep, obviously what happened last Friday with Fable 5 was a little bit of a wake-up call, I would think, in terms of export restrictions for your most intelligent models and what that means for the world. I think there is definitely, and we see it. We talk to everybody, we have customers in China and in France and you name it. We definitely do see the request for more support to act in a sovereign way. I think the question is, how can technology as a whole, not only AI, kind of step up to actually support that? Because I think if we do it the legacy way, it's going to be so expensive that it's going to be untenable. So the question is, how can AI and tech help us to allow for safety, autonomy, and sovereignty, and still operate scaled platforms? Because nobody wants to go back to, I have a different product with different data set, with different cloud in every country. It's ultimately, we all need to run businesses and we want to drive growth. So we need to find basically a way to address the need, but do it through tech, because doing it the old way is not going to work, basically. So I hope it's going to become an enabler, but I don't think we've quite figured this out yet.
I mean, I was thinking about the report, which was also just really talking to the emergence of other financial centres and the gap between New York, London versus a Dubai or a Singapore, or Mumbai, Shanghai. And I think for me, certainly having been in Hong Kong and Singapore, looking at the work there around developing AI models, AI standards and governance, but also supporting industry efforts around digital assets, whether it's on the payments side or on the delivery side. The one observation I have is this theme around a public-private partnership, if you will. And I look at Singapore's Project Guardian, where almost annually there are de facto 10 digits in terms of differing government-sponsored industry experiments and industry use cases for differing areas of the ecosystem, from the buy side to the sell side, from the funds, the payments, to delivery areas and collateral. And certainly that public-private partnership agenda was something that's visible from the ADGMs to Dubai, to Hong Kong, Singapore, Luxembourg, Zurich. You know, you see a very intensive public-private effort and an industry relationship and working quasi-JV around driving initiatives. And I think that is the opportunity for London around how our regulators and standard setters and policymakers are not only providing direction and providing clarity, but actually participating and de facto co-opting into industry efforts. I think it's very exciting with Chris Bullard's appointment, but I think it'll be interesting to see how government interacts and tries to support and actually take part in those efforts. So we have sort of lots of mini digits in different sorts of use cases. And I would also say for London, looking at the report, it's also an opportunity to see London's connectivity and interaction versus in New York with Singapore, with Hong Kong, with Dubai, with other markets. And that exchange of standards, data flows, governance methods, attitudes around existing infrastructure versus newer infrastructure emerging, operational dependency questions, and that integrated future that we're looking at, I think that's going to be the key opportunity for London as to how London becomes the de facto global integrated model financial centre, very correlated with those activities and other financial centres. So I see a key opportunity.
Brilliant. I'm conscious of time, so I'm going to ask you one last question. In the next 12 to 24 months, where are you going to put all your energies? Which financial technology are you going to be most focused on, or which use case is going to take up most of your time? It could be with your firms or with clients, or indeed within your businesses. Do you want to go first?
Yeah, I mean, for us, it's super crystal clear. It's AI.
AI?
Yeah,
Okay.
definitely on the fintech business, in the way we work and what we provide in terms of value to our clients, 100%. Yeah.
And with AI, what aspect of AI are you going to be focused on?
So again, like there's a lot that we do internally, like in terms of how we move, which is super exciting. The main thing in terms of what we change for our client base globally, again, it's all about helping our customers transform into an agentic organization. Everybody's moving. Like we have some amazing customers. Like we've been working with a South American bank. They have 100 million retail kind of customers, and they're charging ahead like crazy. They're basically moving all of their processes and moving them natively agentic, quarter by quarter by quarter, and they're almost done. And if they think about partners, it's all about how you integrate into a native agentic ecosystem, right? So it's all about how do we enable that? How do we enable our customers to go natively agentic? And
excellent. Agentic AI. George, where your energy is going to be?
There's still quite a lot of discussion, I think, around three questions, which is, when does AI show up on your P&L?
Yeah.
What are you going to be doing about the workforce and the talent you have? And then how do we use AI to come back to almost a parity with US peer companies that are using AI and seeing that on their P&L, and we're dealing with the workforce. So a little bit of strategizing around all that.
Great. Paul, in 30 seconds, clock's ticking.
Tokenization around existing infrastructure, existing market infrastructure, as we're moving from single platforms and single bank ideas toward existing architecture, adapting to support new securities, new types of payments, new types of collateral methods, new types of repo securities lending, and also new types of FX activity. So existing infrastructure responding to the first chapter of bank or single business platforms.
Brilliant. And Trevor, in 5 words?
5 words.
Sorry.
A bit harsh. You've got 30 seconds. So
go for it.
Agentic AI, obviously, I mentioned it at the start. Yeah. We're very focused on that. We think it's super interesting. And as well, I think tokenized assets are really interesting as well. Certainly, we're going to be focused on that as well. So,
brilliant. Thank you all. So a lot of action and activity around AI, Hopefully we'll get the reg interpretation and the guidance that we need and the public-private partnerships to feel that. But thank you for your time and thank you for listening today. Thank you to my panel. That was excellent. Thank you.
Thanks.